Hey y'all, so Calhfa, California Housing Finance Administration, just released a new program. I'm going to dive in today with the limited information that we do have about the Dream for All Shared Appreciation Program. So Calhfa, California Housing Finance Administration, recently released some details about a new program in which they're offering a 20% down payment for qualified first-time home buyers to be used to buy their first home, which is pretty cool because that would eliminate the mortgage insurance, potentially provide a better interest rate, and also get you a much lower payment because they're giving you this loan. What we know about the program is the loan itself right now is an interest-free loan that they're giving you. So they're giving you 20% to buy a home, and then they're not asking for any payments on that 20%. And then when you sell the home at a later date, they just want a percentage of the appreciation. So I'm going to jump into a few things with the website, kind of how to navigate this, what we know, what we don't know, and some of the assumptions that we're making right now based on previous programs. So if you go to the Calhfa website, and I have it up here, calhfa.gov.ca.gov. So it's honestly one of the better down payment assistance program websites for you to go to from a training material standpoint, but it's calhfa.ca.gov, Calhfa, California Housing Finance Administration. So if you go to the main website, this is kind of what you'll typically see here. And as a home buyer, you're going to go to Dream for All. And under Dream for All, there isn't a lot of information here, but basically a sign-up sheet to maybe get more information when you check it out, or want to check it out. So what you got to do actually is a little trick here, is you have to go to the lender section if you want to get program information. So you go to the lender section, you go under loan program information. Once again, you're not going to see anything about this new program, and you got to scroll down and find this latest bulletin tab here. And this is where Calhfa to introduce Dream for All Shared Appreciation Program. So you're going to click this, a new website's going to come up, and then this is going to have the program bulletin. It's limited information, it's just 3 pages. So I'm going to go through some of this information for you today, and then I'm also going to kind of layer in some assumptions we might be making about the program based on previous programs that they've rolled out. So here's what we got. On March 6th, they rolled out this program. It's to all approved lenders, which we are, and it's Calhfa to introduce the Dream for All Shared Appreciation Program. So here's what we got so far. The program itself is going to be rolling on March 27th, okay? So we have limited information. All we have right now is just this 3-page document, but on Monday, March 27th, that is when they're going to be launching the program. What we know so far is it is up to 20% of the sales price for appraised value. So if you buy a $400,000 home and they're going to give you basically $80,000 as a down payment to purchase your new property. There's income limits to it, and this is one of the things that really surprised me. So if you click on this income limit tab, this income limit tab is actually going to take you to a whole new page. And this page is going to be the income limits for the program. Income limits mean the household or the individual cannot make more than this amount. And the amount that they're giving is super generous. For example, Placer County, $202,000. This is, I think, the highest income limit I've ever seen for a down payment assistance program. Some areas, you go look at Contra Costa County, $282,000. So again, this is the income limits. You cannot make more than this to qualify for the program. Okay, so we're going to go back to the original page here, blow this up a little bit. And then what I'm going to roll down here is on the second page, they actually break this down a little bit. And I think they do it in a really good fashion. They break down how this is repaid. And so what they're saying here is in example 1, borrower income between 80% and 150% of AMI using the Home Ready Lookup tool. So I'll show you the Home Ready Lookup tool. But AMI, Area Median Income, that's what AMI stands for, Area Median Income. So it's between 80 and 150% of the area median. If you're in that amount, the Dream for All provides a 20% of the home purchase. The homeowner pays back the original loan plus 20% of the appreciation in the value of the home. So here's how it works. Let's say, and this is, well, actually here, $500,000 value. So they give you a $500,000 value. If you're buying a home for $500,000, they're basically going to give you $100,000. They're going to give you $100,000. So 20% of $500,000 is $100,000. So they're going to give you $100,000. You're going to have a $400,000 first mortgage. So under all other Calhfa programs, Calhfa provides the interest rate on the first mortgage. They have not rolled out interest rates yet. The interest rates are set by Calhfa. Some programs have interest rates that are lower than kind of the median interest rate that you would get if you didn't have down payment assistance. Some are higher. So we don't know what these interest rates are going to look like yet. They will post it on their website like all other programs. But if you're doing this and get buy a $500,000 home, they're going to give you a $100,000 down payment, which is awesome. And then the idea is if the home appreciates at a later date, when you sell the property, you have to pay back what you borrowed plus a percentage of the appreciation. And in this case, it's 20% of the appreciation of the value of the home. So in their example, if the home goes up to 5 years later to $640,000, the home price plus appreciation is $140,000. The homeowner's share is $112,000, so the homeowner would be able to have $112,000, and then the down payment share would be $28,000. So in that case, if the home went up $140,000 in value, you would pay back the original $100,000 that you borrowed, and then all you would owe them for access to these funds would be $28,000, and you would walk away with $112,000. Let's use a little bit easier example. Let's just say the home goes up $100,000. So you buy a home for $500,000, it's now worth $600,000, and you look at selling. You would have to pay back 20% of that appreciation. So if it went up $100,000, you pay back $20,000. It's a simple calculation plus the original amount that you owed. They go into a little bit further details here, like and it's a smaller amount, which is kind of cool. So if you actually make less income, so if you're at 80% equal to or less than 80%, so this example up here was between 80 and 150 of the area median income limit. So for individuals that have a lower income and are still qualifying for a home loan, they're actually only going to take 15% of the appreciation, as opposed to 20%, which is kind of cool. So again, 3-page document here, really easy thing to kind of look at. Here's the other thing that's really cool is shared appreciation cap. So they are going to cap it at 2.5 times the original loan amount, which is kind of cool. So the maximum amount due in this kind of scenario here would be $350,000. So again, they're capping it at 2.5 times the original principal loan amount of the shared appreciation. Let's say you keep this thing for 30 years and the home price triples, you're not paying 20% of that thing. It is capped at a certain amount. So again, all it is a 3-page document that everybody has access to on the original Calhfa page. What we're assuming here is that when they do release details, which we'll know, everything will be populated here, and we'll be able to jump in and get more information out. So if you're interested in this program, here's really what I think you should do is you need to get with your lender today. We're approved of the program. We could start working on it. Here's the reason why I say today. The program is going to roll on the 27th. This is the largest down payment assistance program I've ever seen from Calhfa. The last program that they did was a 10% down payment assistance program, and they ran out of funds pretty quickly. So there's a lot of attention about this. I'm seeing a lot of people talk about it. We're getting a lot of questions about it. A lot of realtors are reaching out to us. A lot of customers are reaching out to us. So there's a lot of awareness about this program. There wasn't as much awareness about the 10%. There's a ton for this. So my concern is it could be a limited amount of money, and it could go quick. So what we want to do is we want to make sure that you are ready. We're going to qualify you for a home loan, and then we're also going to kind of overlay some of the things that Calhfa did on previous loans, just to kind of say, hey, we think you should be able to qualify based on the previous programs and the limited information that we have. And then as soon as they roll the program with details on how you qualify, we'll update everything, and you'll be ready to rock and hopefully take advantage of these funds. On previous programs, you can't lock the money ahead of time. So you have to get into contract, and then you reserve the funds. So that's where it's like we can pre-qualify you for the program, but we can't reserve that money until you actually get into a home. So you have to move quickly on this. If you have any questions, please reach out. Hope that helped. Everybody have a blessed one. Take care.